Meanwhile, turning our attention to India's IT sector, it seems big IT has spoken. TCS, Infosys, Wipro, they've all wrapped up the financial year. But the fourth quarter scorecard has something for everyone. There are cheers when it comes to profits. There are sighs over revenues. And there is a lingering sense of deja vu when it comes to margins. So let's talk brass tacks first. TCS has seen flat revenues and dipped margins. And there is a slight decline in the profit after tax as well. But despite all of this, it's celebrating regional growth and a $30 billion revenue milestone. If you look at Infosys and the story unfolding over there, it came in with strong profits, but revenues and margins have fallen. Attrition has ticked up and the outlook is a cautious 0 to 3% revenue growth for FY26. Wipro was the surprise cheerleader this time. Profit after tax is up 6.6%. There are large deal wins that are up 48.5% year on year. Margins have held steady for Wipro, but management's tone remains cautious, and which is why we saw the impact play out on the stock as well. The management flagging off tariff headwinds and macro uncertainty. So across the board, clients are hesitating, deals are slowing down, and tariff tensions are clearly causing boardroom headaches. But AI is the knight in shining armor, or so it seems at least. So what does all of this mean for India's $250 billion tech engine? Are hiring plans being shelved? Is Gen AI now opening up new frontiers or not? To decode all of this, what's happening in the IT sector, let's cut across to our guests joining us, our two panelists, Piyush Pandey, a Senior Vice President and IT Lead Analyst at Centrum, and with him, Sudeep Bandyopadhyay, the Group Chairman at IndiTrade Capital. Gentlemen, a warm welcome. Let's get straight to it. Mr. Bandyopadhyay, tell us about the earnings. What's the pulse that you're catching this time? Wipro stood out this time on profitability and deal wins. But you look at TCS, you look at Infosys, there is some wobble there. In your opinion, what best sums up the evolving story of Indian IT if you look at the fourth quarter numbers?
Well, I think the fourth quarter numbers definitely is a mixed bag, but more than the exact numbers which came, I think I will like to draw your attention to the fact that Wipro also in their management commentary talked about projects being paused and challenges in getting new projects awarded. There is a mid-cap IT company, Sonata, which talked about a major problem with one of their clients and the project being shelved. So I think the biggest challenge is the uncertainty which is now prevailing in US, where large US corporates are very reluctant to either sign on the dotted line for new projects or transformational IT projects, or even looking at pausing the current projects which are not critical. And now, under the circumstances, by and large, Indian IT, which derives 50% plus income from the US markets, definitely are looking at an uncertain scenario as things stand today. While some of them are talking about the future, but there is no clear guidance coming. Even Infosys talked about between 0 to 3% growth, which is a wide range actually. The other companies also similarly talked about very vague projections for the current fiscal. So under the circumstances, I think I would say there is significant amount of uncertainty as far as the future is concerned. And we have to factor that in all calculations going forward.
Consider client demand. You look at deal conversions as well across the big tech companies, Mr. Pandey. What's the sense that you're getting? Because in this uncertain environment, how are you viewing overall the fourth quarter earnings?
It has been decent across three companies. I would say, in fact, for Wipro, deal booking was very strong compared to previous quarters. But the challenge remains in terms of execution. So clients are taking more time to ramp up these deals. And in fact, for some of the newer deals, in fact, in the deal renewals, they are taking slightly longer time. So taking into account, I would say Q1 should be soft across the board. And because of softer Q1, entire FY26 will get impacted. So broadly, one sense is that also that like headcount addition has been very muted across all three companies. So near term, I think there is a broad consensus that we may see challenges in terms of revenue growth. But in terms of, I would say, green shoots or some positives, I would say AI-led deals have been gaining traction. And I believe that over the next 3 to 4 quarters, AI-led deals would be the significant growth driver. So already it is expected that they should lead to significant increase in number of volume of work with slight deflationary impact. But we are in a transition phase, and I would say next 2 quarters would be challenging.
Yes.
But beyond that, we should see, I would say, a certain recovery for the IT services companies.
Well, the Wipro management has flagged off tariff-led uncertainty and deal is going to be on IT sector. And after the kind of dust settling, and I don't know how much dust can settle in the near future, will we see more deal pauses? But Mr. Bandyopadhyay, also when you look at this kind of AI skilling, both Wipro and Infosys have spoken about it. There is investing and positioning Gen AI as a growth lever. So one wonders if that is going to help offset. But are we really seeing AI monetization at a scale yet? Or is it still just a marketing buzz, you think?
Well, to an extent, it's a marketing buzz. AI is real. It's not something which we can wish away. So Indian IT companies are gearing themselves up to compete in that space and provide services in that space. And that's the right thing they're doing. But if we are expecting that to translate into revenue and compensate for the uncertainty which is prevailing in the US market regarding large deals, I think that will be expecting too much at this stage. Look, the tariff war doesn't have a direct impact on IT, but it is the tertiary impact which is humongous. And that's the biggest impact on any single sector we can think of. Because Indian IT depends on US contracts with US manufacturing companies, financial services companies, and pretty much the entire corporate America. Now, if the corporate America is wondering whether they are getting into a recession or a slowdown or a stagflation, obviously the IT budgets will be the first ones to be shrunk, cut, or paused. So under the circumstances, even if they understand that AI is critical, I'm not sure whether big AI transformational projects will be taken up till the time the dust around this entire tariff thing settles. And by implication, the forecast or the prediction regarding US growth, US inflation, US GDP gets more clarity and more certainty.
We don't know how much time that's going to take. Meanwhile, I was looking at the attrition rates, Mr. Pandey, both at TCS and Infosys, and they seem to be creeping up again. Do you read this as post-COVID normalization, or do you think younger tech professionals now are more impatient for vertical jumps? Because in a time like this where uncertainties are growing, how are we seeing higher attrition rates?
Yeah, I would say that broadly attrition has mostly bottomed out across IT companies. There has been some uptick over the last 2 to 3 quarters. And initially, it was believed that the slight uptick in attrition is because of slightly higher demand. So as demand in the sector improves, that leads to slightly higher attrition. And see, in a way, I would say there is a certain healthy range of attrition, which is around, say, 12 to 15%. And in a way, this also reflects and sort of like a lead indicator of demand environment in the industry. So in a way, I would say certain uptick in attrition can also be read in a positive way, because it reflects that as an industry, there is an ample amount of work coming, and that is how I would put it.
You think there is ample amount of work coming, and that should sound very reassuring. Mr. Bandyopadhyay, do you agree? How are hiring and fresher onboarding likely to trend in FY26? Both Infosys and TCS have maintained workforce size, but there is caution when it comes to outlook. So should engineering graduates really brace for a slowdown, or do you think there will be ample jobs going around?
Well, I think it's better to be careful at this stage. Look, honestly, Vikram, nobody knows.
Yes.
You ask a US corporate, you ask Indian IT, heads, they're waiting, and they're waiting and watching. The way the US presidential policy making is continuing, it's a roller coaster ride. So nobody's sure what's going to happen, how things are going to end. Sanity, if it prevails, I think things should settle down quickly. And that augurs well for Indian IT companies, hiring, and everything else. But how long this will continue, it is very, very uncertain. And look, assuming that this 90-day pause for the tariffs for everybody else other than China remains where it is, and every other country, US strikes a good deal. Now let's assume that scenario. But if US and China can't strike a deal, and this status continues of crazy duties on both the sides, it's a disastrous scenario for the whole world. because the largest economy, which is US, the second largest economy, fighting the way they are fighting, will have a repercussion on pretty much every other, trading country, including India. And we cannot wish that away.
Right.
So I be cautious, and pretty much that's the sentiment being expressed by all IT companies in their earnings call.
Yes, from what we are hearing from the managements as well, Mr. Pandey, clients are now being cautious, especially when it comes to manufacturing and telecom. So is there any vertical that seems to you as a silver lining right now, or do you think this downturn that we're likely to see is fairly broad-based?
I would say BFSI is the one vertical where there are some green shoots.
Right.
So BFSI, I would say, should maintain its growth slightly at a lower rate in the near future. But apart from that, manufacturing, consumer, telecom, auto, they are all stressed. So in a way, I would say broad-based slowdown, except BFSI, maybe we can say.
All right, just BFSI. And over there, Mr. Bandyopadhyay, do you think Gen AI and automation could meaningfully revive revenue per employee, those kind of metrics? Those have remained stagnant or they've fallen for several quarters. But do you think that BFSI can actually drive that kind of Gen AI growth as well for these companies?
Well, there is definitely potential for that to happen, but
Okay.
I'm not sure. Like Piyushji is saying, BFSI definitely is in a slightly better position vis-a-vis other industries. But even there, if you track the data coming out of US, the slowdown in deals is visible.
Yeah.
The slowdown in pretty much every other sphere of BFSI activity also is visible in US.
Yeah.
Now, under the circumstances, I'm not sure how strong the revival through BFSI can be for Indian IT earnings and per head earnings and other matrices. So while BFSI has the potential to fare better than other industries, even under the current circumstances, because of a perceptible slowdown even in that space, I'm not very sure how far this can help.
Right. So in that sense, companies in these kind of uncertain times needs to maintain a certain kind of operational discipline as well. Do you see that coming through, Mr. Pandey? Wipro has said that they're going to try to maintain margins within a narrow band, flat margins across the board actually this time. So does it show that companies are working towards operational discipline, or do you think it's just lack of pricing power right now?
Yeah, I would say companies remain focused on maintaining margin in near band. They have certain levers like pyramid improvement, increasing the utilization levels, controlling employee attrition, and maybe normalization of certain wage hikes. So broadly, I would say they should be able to sustain their margin in a close band for FY26 also. But the concern remains growth, I would say. This is where the investors are more concerned about the growth. Margin-wise, I would say sort of mostly taken care of, because there are certain levers plus they continue to focus on operational efficiency across the board. And they're also trying to use automation in their internal processes. So that can drive certain uptick in margin. But broadly, margins should broadly remain stable in a narrow band, and growth remains a concern.
Mr. Bandyopadhyay, what's your take? Infosys is claiming to have delivered the highest ever free cash flow. And all this amidst the noise around soft earnings, how much weight should investors place on that kind of strength right now from a company like Infosys?
Well, I think that's a considerable strength because, even Wipro, they have a record free cash flows. So Indian IT companies definitely have record cash flows, and that is helping them, go ahead with buybacks on a regular basis. That does help investors, because if you look at it in absolute terms, the kind of revenue growth they're showing doesn't merit the kind of P multiples they're enjoying even now. Because if you have 2 to 4% kind of a top line growth, which is what they have been doing, how can you justify a P multiple of 15 between 15 and 25 for Indian IT companies by and large? So obviously the free cash flow and the continuous buybacks, dividends, etc., is playing a big role. So that's the strength, inherent strength of Indian IT companies, that probably they can withstand these kind of slowdowns in US for some time, definitely. But we have to recognize the fact that there is a challenge right now, which is what all the IT companies are doing, without exception. And they are in I would say, for lack of better word, in a pause mode as far as, new decisions, expansion, etc. is concerned. And that's the reason they're talking about controlling cost and maintaining margins. They are not talking about massive top line growth, new deal wins, They are only talking about maintaining margin, which I suppose through cost control they can.
So that kind of caution when it comes to costs as well. I just want to understand what the outlook is and a quick take, perhaps, Mr. Pandey, for FY26. Is this going to be a year of consolidation and cost control, or is this going to be the year that AI-led transformation actually kicks in?
Yeah, I would say this would be the year in which IT companies would be making significant investments in the AI-led initiatives. Mostly, we should be seeing some major projects led by AI and generative AI. And plus, margin would be the another key focus area. So, margin, I would say, broadly should be maintained at current levels. And growth should be, I think it would be difficult to further, I would say, push up growth. So, growth, I would say, mostly should be below, say, lower to mid single digit, perhaps, in most companies.
Same question to you, Mr. Bandyopadhyay. What's your outlook for FY26 for the IT sector?
No, well, I completely agree with Piyushji, what he's saying. There will be a lot of investment in AI, and I think Indian IT companies are right in doing that because the future is going to be AI. So that investment will go, but the rewards of that investment, to my mind, will not flow in FY26. We will have to wait for the future financial years. It's always the case, when you make an investment in a new technology, the income doesn't come immediately, and that's the right thing to do. As far as Indian IT is concerned, FY26 will be a year of consolidation and a subdued growth. We have to be prepared for that. Even if things settle down, in the near future, I think the volatility around the US markets will continue to put pressure on new projects and IT earnings. We have to be prepared for that. There's absolutely no doubt about that in my mind.
Fair enough. So it's a fourth quarter, where India's IT giants have shown some amount of resilience, but not exuberance. Amid these kind of deal wins that are being reported, there is dividend cheer as well. There's also a clear message that's going out that clients are cautious, hiring is slowing down, and the real promise of AI, now that is still waiting in the wings to turn in revenues. And that's going to be a crucial piece in FY26. Thanks very much, Piyush Pandey. Sudeep Bandyopadhyay, always a pleasure getting in your perspective on different sectors, and IT sector is the one that we are tracking very closely today.